Now, despite Brazil's strength, the World Cup has been highlighting the country's economic problems. Rachelle, Akuffo explores what lies ahead for Latin America's biggest economy.
As Brazil readies for the 2014 World Cup, anti-government protests are casting a cloud over the festivities. It's hard for demonstrators to stomach the tournament's $14 billion price tag, given Brazil's infrastructure issues, lack of job opportunities and high inflation.
Let's say Brazil wins it. There's going to be celebrations, everybody's going to be happy, partying and all that. But Brazilian people are different this time. They're extremely frustrated with the government. We've seen that a year ago with the demonstrations.
Brazil's central bank projects economic growth will slip to less than 1.5% in 2014. Inflation will rise this year and next. Concerns over high prices top the list of concerns in a recent poll. The Pew Charitable Trust found most Brazilians, 67%, have a negative view of the country's economy. 61% said hosting the World Cup is a bad thing because it takes away funds from public services. And 63% disapprove of President Dilma Rousseff's handling of the economy. Still, many in the host nation feel torn between demanding a better standard of living and celebrating the World Cup. Last week, President Rousseff downplayed the need for deeper economic reforms and told reporters she couldn't explain why Brazil's economy was growing slowly. She remained optimistic about the impact the World Cup will have on the economy. But that optimism could be short-lived.
Yes, there will be a positive impact on the economy in the short term, especially in the stock market, but it is not going to last because macroeconomic data that we see in Brazil are not strong enough to maintain a rally.
In the past 4 years, Brazil's private consumption and investment activity have declined. It's a trend Brazil's economy can't afford to continue if it hopes to keep its goal of sustainable economic growth. Rachelle, Akuffo, CCTV.